Sorry about that. I was having a technology issue. So anyway, we're beyond that. So hope everyone's doing well. It's great to be with everybody. So I apologize again for being late. Where'd you start off at?
I was just talking about how interesting the market dynamics are right now, and you know, as we look at some of the data, we're just trying to figure out what it all means. And I told them that you had all the answers, and so that when you came on, you'd explain it.
Yeah, well, that's why I was late. We're just coming up with all the answers, right?
Right. I know those last couple are just so tough. I did ask everyone what kinds of things they're experiencing in terms of buyer fatigue in the marketplace, and so people are starting to chat, and we're seeing things like buyer fatigue is high, especially for lower budgets. Numerous buyers have decided to wait till next year. They don't want to get into a bidding war anymore. Sellers afraid to go on because they can't find something to buy and that sort of thing. And that's where we are.
So we'll do this part now, and then I know Diane's got a school update, and we'll do that after. That makes sense?
It does, yeah.
Okay, so yeah, do you want to show those graphs real quick? I think they're really instructive. And then I'll kind of give you some forecasts from NAR, some kind of local numbers, how we're doing compared to the local numbers, and maybe a little prognostication.
I'm just bringing them up here. Just take a second, I hope.
See Gladys's comment. She's putting in offers that are 30,000 over list price and still losing out. Those kinds of things definitely can spook, you know, buyers for sure.
Yeah, that's true. So I didn't put these in slides, so I might have to bounce back and forth a little bit here. But well,
I think this is. Yeah, just the trend for everybody to see, because you know so everybody's living in their local market, which of course is what you do. Being able to take a look at a broader trend now, you know, we know our organization. We sometimes, all of us, right, me included, kind of forget the scope of our organization. So you know, we're the largest real estate company north of Boston. So we touch more markets really than anybody else. So and I'll have Ed describe this, but this is written weekly units comparison company-wide. So this isn't just Atkinson or Camden, Maine, or you know Quechee, Vermont. It's the entire. We basically represent pretty much most of the entire northern New England footprint. So, you know, Ed can put a little color commentary around this, but keep this in mind. This is a composite view of northern New England.
Right. So I love doing stuff like this, and I've been doing it for years. And you know, there are some patterns that typically you would see, but I think they're all out the window now. So just what you're looking at here is the number of units written, and we track units more than we track volume or GCI, just because units are a more fair measure of what's going on in the marketplace. So this is January, the first week of January, second week of January, all the way through, right? And this is a pretty typical number of written units, a pretty typical trend. And then we see this, and I'm pretty sure I don't have to label that downturn, but you know, this is a downturn in May, and then the market sort of bounced back a little bit, as you can see. And typically what you would see is more of a hump here and then sort of down, right? And so you see this, you know, what looked like was going to be a V-shaped recovery. It sort of petered out and then it exploded. And I think the interesting thing is we're in such uncharted territory here. I was talking to an agent yesterday in the Atkinson office, and I asked her, I said, did you expect to be this busy given the circumstances today? And she said, no, not really. And I think we all sort of feel that way. But what you see here is a pretty interesting trend. What I want to do always is sort of extend this out and look at the future, which you can't do. But
so
you know,
that trough starting in between week 27, 26 and 27. So that would be when?
So this is last week. That's
Yeah.
2 weeks ago. That's 3. That's a month ago. And that's 5 weeks ago.
So kind of put, let's just leave that up so people can digest it. So kind of put some perspective around it. We should kind of understand this period of time as the inflection point or the in-between time. So it's only been less than 2 months, right, from Memorial Day, or you know, less than full 2 months since the stay-home orders have been lifted. Right, I think that's only been 4 or 6 weeks, right? Because most of the stay-home orders got lifted sometime in June. And so there's like literally pent-up demand. I think we need to understand where we are as a bubble. And you know, bubbles exist because pent-up demand builds up. And think about it like a pressure cooker. And you know, there's a release valve in the pressure cooker, right? Just to let out just enough so the thing doesn't, you know, top doesn't come off it. And so we're in this very in-between state. So think about where we are right now. Like I'm in the Keene office, okay? Big, beautiful building, not a lot of people coming in and out. And yet we're still writing a lot of business right now. But people are still unsure about being in office environments and all that. So, you know, we're still from a bubble perspective. I think we peaked in that bubble, you know, probably right here about that week 26, 27. And we're kind of on the downward slide of that bubble. So think about it in terms of, you know, of peaks and valleys. And now we're on the downward slide of this bubble. And it doesn't mean that the market's going to fall off the cliff, but we're kind of entering into a trough. Now, all these things that we're seeing, like multiple offers and buyer fatigue and all those types of things, are really all symptoms of where we are. They're just kind of they're the data points that tell us that we're in a really unusual time. And I'm going to talk about office and sales support in just a second, because I think it falls into this category. So we just came off a period of time where the offices and businesses were shut down. I mean, we were essential, but not able to operate out of the offices. And it's only been really 6 weeks since that's changed. And in that period of time and leading up to it, you know, people had some pent up demand. Look, people spend a lot of time at home. Whatever they didn't like about their house, they're either fixing, because if you go to Home Depot or Lowe's, they're packed all the time. So people are either fixing things or they're moving, right? One of the other. And then, you know, even me included, because I had said this story. I said, well, maybe I'll put a pool in. So I called my friend Terry down at the pool place. He's laughed at me because they're so busy. So, you know, everybody's got that kind of same mentality. So kind of understanding where we are and then leaning into the fall, I think everybody kind of anticipates that there could be some other limited shutdowns or stay-home orders based on the expansion of this, especially now with more testing. So we're kind of in between the first stage of this and rolling into maybe what the next stage might be. Now, we don't know what that is, but we can kind of guess where maybe it's a limited shutdown of some type, you know, by hotspot, you know, and maybe it's by county or maybe it's by city or something like that. So you think about it as we're kind of at this inflection point, and we're kind of rolling out of the first phase, kind of in between first and second phase. Interesting numbers. So at a national level, residential resale units from NAR. So in 2019, for the year, the run rate was 5.35 million residential resale units. So that's houses, condos, you know, 2 families, not new construction, by the way. And then the run rate that was calculated for June, so 12 months, right? A 12-month run rate. For June, nationally, it was 4.75 million units. And that's with June being 20% over last year. So under kind of, when you think about it in terms like that, we're going to be well off probably last year's numbers at this current run rate. Now what's making up for that is sales prices. So it kind of doesn't really matter what market you're in, sales prices are going up. And of course we're paid on volume. And you know, my good friend Bob Wida, who just celebrated 50 years in the business, he and his wife, you know, he and I always used to have this debate. You know, I always look at units first, but we get paid on volume. So it's a chicken and egg discussion. Which one's most important? You always like to look at volume. I always like to look at units. I think units are still a pretty good predictor right now, although benefit being that we get paid on volume. And so volume is kind of carrying the day right now. We're lagging behind in units. As an organization, you guys are doing really amazing work. I mean, we're only like 2% behind last year in units, but all the markets are somewhere between 4 and 9%. So, you know, you guys, real shout out. You guys are doing an amazing job, you know, servicing your clients in this environment, and you're really bettering the market by you know, half, right? So you're 50% ahead of the market as far as year-over-year decline. Inventory, no matter where you go, either locally or nationally, the national number is 4 months of inventory. Our local numbers are about 2 months. Matter of fact, I think New Hampshire was 1.8 months, and Vermont and Maine, you know, kind of float in between there. I'm not really referencing Vermont's numbers just because they had a full shutdown, and so I don't think it gives us a very good view as to what's really going on there. Maybe by September, when we get maybe a first, you know, maybe get like a full couple quarters, right? We'll start to look at their numbers, but I just don't want it to skew the conversation because I don't really know how much you can get out of it because they were shut down for so long. Affordability keeps going up. So, you know, with interest rates now being at that 3% range, even though sales prices are going up, sales prices are actually, affordability is actually going up faster than sales prices. Because, you know, with rates dropping from 4 to 3%, it basically increases the buying power by 25%. So rates actually decreasing is actually increasing affordability faster than what we're finding in the marketplace for appreciation. I think for sure what we are seeing now is the long-term impact of not adding housing stock to the existing housing supply. And I know I say this all the time, and but now we're really feeling it. We're really feeling where in the last 10 years since the last recession that we haven't added enough housing supply to meet the demand of not only the existing consumers, but new consumers as they enter the market. So nationally, 34% of all home sales are first-time buyers. So first-time buyers, right, and that's that millennial group, you know, they are entering the market in big numbers. And every year, the millennials, you know, have the potential of adding 1 to 1.5 million new home buyers to the environment, which means that if home building is somewhere, you know, between 700 to 1 million units, we still could be as many units. We could still be off by 500,000, you know, housing units. So there is a lot of pressure on the existing housing supply, on the existing housing stock. There is some new construction, but not enough really to totally you know, equalize the need. And we're going to be dealing with that for a long time because it took a long time to get here, and it's going to take some time to sort it out. And you know, that's probably a much larger discussion about what some of the solutions could be. The feverish pace or frenetic pace that we're dealing with, I think. Well, the word that I was going to say and then retract was panic. I don't think it's that, but it's that people know that they're going to be spending some more time at home. There's pressure on people now to find workplaces at home. Like it's hard to get the kids running around working at the kitchen counter. And so I think there's some of that. People just know they're going to be spending more time at home. And to be straight about it, could you find a better time to be buying a house now with 3% interest rates? And the appreciation rates are only 5, 6, 7%. They're not huge. So really, this is a very good time to be buying a house, because even though you might be paying a little bit over asking, you're buying it under great financial conditions. The one critical thing, as we're kind of leaning into the future now, the eviction moratoriums and the foreclosure moratoriums get lifted at the end of this month. Those are really critical to get extended. There is a slight chance that you could see, you'll see more foreclosures coming up. We're already seeing an uptick in that. I forgot what the national number is, but it had gone up a little bit. Let me see if I got it right here. But I think it's likely we'll see some of that. There'll be another stimulus package, but it won't be as rich as the way it's appearing. And then we'll start to feel the impact of the COVID economics. So right now, the economy has been functioning as if it has 100% employment, even though there's still 50 million people unemployed because people have been paid to stay home. That effect is going to start burning off. I think we'll start to see the market soften a little bit. So right now, I know that we're leaning into pricing. I'm going to say that, I would be a little cautious about that right now, as we're leaning into, kind of the run up to Labor Day. And again, as the stimulus stuff benefits start to burn off, we'll start to see some weakening in the economy for sure. It's inevitable. And I think that will naturally kind of impact, the economy and home buying. Now, that doesn't mean that things are going to come to a halt. It just means that I think right now, as we're leaning into pricing, I lean a little bit less. And if you've got people that want to get on the market, it's still a very good time to get on the market to sell and buy. But I would be mindful of your aggressiveness on pricing, because everything we're doing right now is measured in weeks, not months. I think that's a really important point, that there's elasticity to this environment just because of the nature of it. I mean, remember, we went from 1 week of, oh, hey, we've got this problem, to a week later, hey, you have to stay at home. And so everything now is really measured in weeks, not months, and certainly not years. That foreclosure rate, so foreclosure, short sales in June were 3% of all sales. This is nationally. And in May, it was 2%. So, 1% difference, maybe it's not that big a deal, but I think it gives you a trend that there are people that are unemployed whose benefits will be burning off, and they will have a hard time making rent and mortgage payments. And that will simply be a reality. Sidebar, it's one of the reasons why we're pushing so hard on food banks, because there's going to be a lot of stress on those food banks as we get north of Labor Day. So let's see how we're doing for questions. Are you monitoring those, Ed?
Yeah, there's some good discussions going on here. And Renee up in Auburn says that she was talking to a foreclosure agent who's waiting for the moratorium to be lifted because he has 75 in the pipeline up there in LA.
Yep. Yeah, thank you for sharing that, Renee. Here's the thing that we have to remember. Now, in this environment, okay, a week is, a day is like a week is like a month is like a year. And I was reading this article about how that this period of time that we've been through has accelerated almost all trends, business and social, by 3 years or more. And so the fact that we can go out for dinner and do all these other things, you know, it kind of gives us a sense, a kind of a slight feel of normalcy. Well, as the stimulus starts to burn off, we will start to see the impact of this. Now, I don't think the economy is going to collapse or anything like that, but we will start to see the impact of that. And that was so fascinating, Renee, that somebody had mentioned that to you, because I think that's what we're going to see. That's what we're going to see next. And it will come in a way that will be like, wow, foreclosure, those come from. Because right now we have a little bit of a masking effect going on with the economic conditions.
I'd also like to point out, I stole a conversation that I had with Nancy Walsh this morning and put it in the chat. It looks like mine, but really it came from a conversation I had with Nancy. And you know, one of the issues that we have with buyers right now is that buyers come into the marketplace don't fully understand what it's like and what to expect. And the conversation Nancy and I had was, we need as agents to spend a lot of time up front setting the expectations, because they're going to learn these things anyway. They're going to experience the frustrations. They're going to understand better that the offer, that the way they crafted it may not work. And it's best to get that stuff out ahead of time. So setting expectations, and an old realtor friend of mine always used to tell his clients, you're willing to pay me a lot of money for what I see and hear. So let me make some recommendations for you. And I think those words and the conversation I had with Nancy today are so important when dealing with buyers now. It's really unfair to take a buyer that doesn't understand the process, throw them out in the marketplace, start presenting offers, and then have all that stuff that's going on, right, sort of crush them. So anything you can do on the front end of that would be better for your clients. Also, you should know that we are collecting all the chats. So if you have questions and we don't get to them, I'll put out an email with any answers that make sense. So keep the chat rolling.
Yeah, I'm just going through my notes. I think I kind of covered that. Just before we transition to Diane, so I just want to talk about how we're continue to reorganize support and all that. And first is that we are more committed today than we ever have been about a full support environment for everybody. Everyone's working a lot harder to get this business done, and so we are immensely proud and really in awe, really, of the great work that you guys are doing, and I know you're doing it under certainly difficult and unusual circumstances, and we're all trying to make the most of it right now. And I think there's a sense that, well, let's get as much business closed as we can because we don't know what the future is going to hold. And there's some wisdom to that. Not to come at it from a scarcity perspective, but there is wisdom to that because this is a very elastic environment. So I don't think any of us would have predicted this spike that we've had. And so from a support perspective, we're looking at, part of what we learned early on in this process is that we need to build systems that are adaptable and also resilient. And adaptability and resiliency are cousins to each other. And so we also have an eye on the fact that it's likely that we will probably have to send everybody home or send some people home from the offices this fall. So it's about how do we construct a system that can adapt to whatever the conditions are and that is resilient through that adaptation. Now, we're having really amazingly good stories coming out of a lot of the regions on how effective the new support model is. We have some regions that are experiencing high volume and they're understaffed, and we're moving to staff those immediately. So there's elasticity to this, and I want to thank everybody, for your patience as we're working through this. It's all new to everybody, and we meet every day on making sure that we're staying up with things. And I don't want anyone to ever think that our commitment has changed about support, because really what we know is that support's going to be even more important than ever has been because of the additional pressures that's been put on everybody. So in the areas where we need more help, we're moving immediately to hire people back, actually, where we can, to weigh in and be able to work in their areas of expertise, either transactionally or marketing related, so that we can get meet the demands of the times that we have. But the thing I want everyone to know is that in addition to making sure that we've got the right people in place and we've got the right number of people to support everybody, this is about adaptability and resiliency, because we're not through this all the way yet. And I think because we're busy right now, and it feels like another busier time, I think we might give us maybe a little bit of false impression that we're through it. And I think we all kind of know we're not. There's probably, another episode or two to go before there's a vaccine and before we can really develop what the new normal is. Because this whole journey is about going to the new normal, not the old normal. The old normal is gone, right? This is the journey now to the new normal. So we'll keep everybody up to date on the support, but we've got great stories about, once we separated everybody, support specialists, by specialization, marketing or transactional, now all of a sudden we're leveraging everyone's strengths. And we're racing as fast as we can in the markets where we need a little more help to either add staff or bring back staff. So thank you for your patience and keep giving us the feedback. Diane, give us a little update on school.
Yes, happy to do that. I'm going to try sharing my screen so I can give people a little bit of direction. There we go. So this is the front page of the Arthur Gary School of Real Estate website. We have tried to make it as easy as possible for people to find continuing education by putting it right here, and it brings you to the link. You also go here, it brings up all of the classes in the format that they're presented in. Live classes, live online, book online, and in each of those categories, you'll find we do right now have some live online courses available with our instructors that we've put together. The details of which state they're good. If you're duly licensed, there's some that you can pick that will give you credits for each of the state that you're licensed in. We are continuing to work on a daily basis to put more of them online for you. The process is kind of tedious in doing so, in dealing with what the states are requiring for us to present to them right now. Book classes, they get sent out on a weekly basis. So if you're looking for education, there's additional opportunities here. Again, the credit hours. And then through our partner, the CE shop, there's courses that are available as well. If you go down to the bottom of the page and click on continuing ed, and they are consistently running specials. And unfortunately, we don't know when they're going to run one. They just kind of throw it out there. They don't do a marketing schedule for us. So, but I would check here. You do have to enter what state you're licensed in and what type of education that you're looking for. But there is pretty good selection. I can get to the right place of courses that are available to you here as well. They've since COVID have consistently done specials for everybody. And I believe that they have been being put out through the daily blast that Lorraine has been doing. If we, had a better way of delivering the, hey, there's a special going on right now, we would be able to do that for you. Adaptability and resilience is something that we've had to figure out at the school as well. I don't see live classes happening, at least probably, if at all, until this time next year. We are in the same position as the school systems, trying to figure out how to get people back into a classroom. So we have been working towards trying to deliver everything online as much as possible. And again, that's contingent on what the states are allowing us to do. But I've met with Chris, and we are looking to streamline the school as much as possible to offer education in a manner that everybody is looking for it right now, and that's not in a classroom setting. But again, I like Ed's taking notes, progress before perfection. This has been a long journey for, from the school's perspective as well. As with everybody else, we had done things the same way for so long, and then all of a sudden COVID forced how those decisions and classes needed to be presented. And you know, it was a great thought to have scheduled for down the road at some point. These would be great to do it all this way, and then all of a sudden it was like 0 to 60. We had to figure out what we were going to do, and it was a long time coming and getting any sort of direction. So we're moving forward. Looking to move my role more into the TMG realm, and being able to focus on some direct training for your associates, and also for you know, managers, or some advanced training as well. So restructuring of the school is ongoing, and we'll keep everybody posted for updates. Ed, do I have questions?
I do not see questions. I would say to everyone, though, that if you have questions about the classes and the schooling, please see your support specialists. They all know how to access that stuff for you. So.
And the other point that I want to bring up is I've had some questions about training in offices. Unfortunately, our partners at Great East Title, because of everything that COVID created in their world as well, we haven't been able to get them to be able to do any training at this point in time. But I'm hoping maybe we can fold them back in the fall and get a schedule out for you for your offices at that point as well. But that would pretty much be in a Zoom format as everything else. Angela said something. I don't know. What did Angela have to say?
Angela's on vacation. She shouldn't be saying anything.
Any words you say now, Angela, are unpaid words. You're
right.
Not getting paid for speaking.
Angela's on Monhegan Island.
Right.
Right.
You guys are funny. Yes, I am away. But I love what Christine Callahan said about buying the classes while they're on sale. As we all know, I love a good sale. And I did that. And I just took the couple classes I needed in order to do my renewal. And now I have all the other classes that I'll take now that will apply to my next renewal. So that was a great tip, Christine, and one that proves quite true.
Yep.
There you go.
So thank you, Angela. That was kind of a good segue. I was going to say the same thing. We should really be prepared that the majority of classes for CEs going forward will be online, and that the minority of them will be live. And not to say that at some point there won't be live classes, but you should really be prepared for the fact that if you're doing a renewal, I mean, now you don't have a lot of choice anyways, but I would be getting into that mindset now that you should just be thinking about, you know, my main license renews August 6th. I just finished all mine online, you know, and there are live classes that are certainly, you know, good to take, of course, and we will be offering when we can some, but I think predominantly they will be online, including pre-licensing. It's in the qualifying ed. The states have been reluctant, you know, as Diane said, they were kind of reluctant to get on that bandwagon. Well, now they don't have any choice. And so, you know, that's going to be a whole other part of our environment that's going to accelerate. So again, won't be that we won't they won't completely go away, but if you're looking for a class in office, it's not going to happen anytime soon. So you should move to the online CEs with the CE shop and get the discount.
Yep, and like I said, they've been consistently offering between 15 and 40%. We will try to get that information out to you, short of inundating people with emails. We'll figure out the best way to do that, but I guess just check back and go to the site, and they're always posted right up at the header. Also looking for other third-party vendors that we can partner with to offer a wider variety of courses. It's easier in some states than others, but that's an ongoing project that we've been working on as well, along with just getting more of our content put into an online format. There is a significant amount of work that goes into be able to present a class by Zoom. It sounds easy, but not much is easy in the world of COVID. So bear with us, we're working on it.
Yeah, everything is it's all new, everything's a work in progress. So Ed, anything else?
All set. Keep hitting it, guys. You're doing great work for your clients.
Yeah, you guys are doing an amazing job, and just keep giving us feedback, whatever we need to do to support you. We are 110% committed to your success, and always in awe and gratitude for the great work you guys are doing. So nice job. All righty. Have a great rest of the week.